Okay, so we are going to be working on exercise 5 from homework 1, and this is a tabular analysis of the transactions made during August 2017 by Crane Company during its first month of operations. It also shows each increase and decrease in stockholders' equity as explained below, because stockholders' equity is common stock plus retained earnings, and retained earnings is revenues minus expenses minus dividends. So what they want us to do is complete an income statement, a retained earnings statement, and a balance sheet for Crane Company at the end of the month of August. So first we'll do our income statement, and hopefully this looks like your Wiley Plus. And I went ahead and filled in a few of the boxes just to kind of save on time. So you want to make sure with the income statement you have the company, what the statement is, and then also the time period, which for an income statement, this time period is for the month ended of August 31st, because we want everything to be on here that happened during that first month of operation. So our revenues, if we look over at our analysis, are right here. It says the company had $10,200 of service revenues during the month of August. So we'll come over here and we'll plug that in. So we have service revenues of $10,200. Okay, and then the next thing on an income statement is you want your expenses, and your expenses we're going to list from the most costliest to the least. So if we look over here under expenses, these are the expenses that the company acquired for the month: the rent, the salary, and the utility. So we'll come back over here and we'll start with the salary and wages, because that was the most at $2,300. And then we'll go to rent expense with $703 that was spent, and then a utility expense of $330. Okay, and then what we want to do is we want to combine our total expenses so we get the sum of all of our individual expenses, and that sum is $3,360 for our total expenses. And then with the income statement, we're trying to find our net income or loss, which we find by subtracting our expenses from our revenues. So we'll have our revenues minus our expenses, and that will put us at a net income of $6,840. And that's your net income. Okay, then we'll move down to retained earnings statements. And again, I filled in some of it. So retained earnings, you always want to be, well, we'll start here. It's going to be for the month ended August 31st, 2017. And we start with the retained earnings at the beginning of the period that you're doing the balance for, or the retained earnings for, which would be August 1st, because that's when the company started. And since they had just started, there were no retained earnings for the beginning of this period. So then we're going to add our net income to the previous retained earnings, which our net income, if we look up here, was $6,840. Okay, and then we'll get the sum of those, the previous retained earnings and the net income, which in this case is just going to be $6,840. Then what we're going to do is we're going to subtract any dividends that the company paid out during this month, which if we look over here, looks like they paid out $2,000 in dividends. Okay, and then we'll subtract that from our previous total, which will leave us at $4,840. Sorry, I did that number wrong. Getting a little bit ahead of myself. Okay, and that gives us our retained earnings for August 31st, $4,840. So there you go. Okay, and then next we're going to prepare a balance sheet. And again, I filled in some of the blanks just to kind of speed up the process. So a balance sheet, the first thing they're looking for is the date, which for a balance sheet, it's point in time, so it's going to be just for August 31st. And then we want to start with our assets. When we start with our current assets, which if we look over here, our current assets are the ones that we will be using, the company will be using within a year from this period. So that's going to be the cash, the accounts receivable, and supplies. So what we'll do is we'll get the sum total of our cash, our accounts receivable, and supplies in that order. So here we've got cash, which the sum was $15,440. Our accounts receivable, which was $5,850, and supplies, which was $940. And then we want to add those together for our total current assets, which comes to $22,230. Next, if we look over at our assets, we also had equipment, which will be $4,990. So we'll come back over and add that to our assets. So our total assets leaves us at $27,220. Okay, so then we have our liabilities and stockholders' equity. So first we want our current liabilities, which are, if we come over to our analysis, are the accounts payable, and then we'll get the sum of the accounts payable, which will be $2,180. And then after that, we want to get our stockholders' equity. So if we look over here, stockholders' equity is common stock plus retained earnings. So in our first box, we'll have common stock, which was, we come back and look over here, $20,200. And then our retained earnings, sorry, it's moving around a lot. For the month of August, if we look at our previous sheet it said that our retained earnings was $4,840. So we'll plug that in. Okay, and then we want to do a sum total of our common stock and retained earnings to get our total stockholders' equity. So that total will be $25,040. Okay, then what we want to do is we want to add our total liabilities with our total stockholders' equity, and that will put us at $27,220, which we want our liabilities and our assets to be the same for our balance sheet, and that means it's balanced, and it looks like that's what we've got. Okay, so if you have any questions about this problem, please let me know, and I hope that everything was clear for you. Thanks.